Well, welcome everyone to another landlord information evening. My name is Anthony Simoneau, and to my left is Michael Simoneau, and to my right we have our special guest for this evening. This one here is a topic that I've had a lot of our clients sort of been asking me lately, and I've really been haven't been able to answer it as informative as I'd like. So I'm keen to get Sam from Property Insurance Plus, who's joined us tonight, to get a really good understanding of landlord insurance. It's a part of the landscape that's changed dramatically over the course of the last 12 months with COVID and a lot of other things that have taken effect on that sense. So this is going to be a great session for a lot of people that I've actually told about tonight to get involved in. So Sam, thank you firstly for joining us and welcome. Michael, I'm not sure if you have got anything to sort of add on at the moment.
Yeah, no, I think you covered off on majority of the content there. Really great to have Sam in to talk a little bit about landlord insurance. We've had a lot of questions coming in from clients, and even personally have questions on our own landlord insurance policies as well, because obviously there's been some pretty big changes that have happened throughout 2020 and into this year. So thanks, Sam, for joining us, and we might maybe jump straight into the content. Sure. And I'm sure there'll be plenty of questions as we go through.
Yeah, good. Look, it was good to point out up front, obviously landlord insurance has been a hot topic over the last year. There's been so much go on in the market, and landlord insurance was really impacted by the pandemic because what happened is rent default benefits went into an embargo phase with underwriters. So we've been in the industry for about 12 years now, and we specialise in landlord and building insurance for investors. So what that meant is our standard landlord policy that we've been selling for 12 years, we suddenly couldn't offer that to new customers with rent default as an inclusion. And it's something that customers have long expected from landlord insurance. What we were able to do though is we quickly redefined our landlord policy, and we still were able to provide cover to owners throughout the year. So as they took on investment properties or started renting out perhaps their own property, they were still able to get landlord insurance, but it wasn't the standard policy that they'd become used to. So just to give you a bit of background on who we are, we, as I mentioned, we just specialise in landlord and building insurance. So what it's designed to do is really protect not only the rental income at your property, but importantly, the property asset itself. So what this insurance policy does is, as well as the normal standard insured perils that you expect from insurance, things like storm damage, fire, theft, those types of things at your property, you're also open to tenant-related risk or third-party risk at your property. So we've focused on providing cover that's relevant to that rental market. So where some policies you might have to add on extras to make it a suitable landlord policy, with us you get a standard cover that includes all those benefits, so you don't have to worry about adding more to your property to be properly insured. So the policy covers things like accidental and malicious damage to your property, but it also includes damage caused by pets, and this has certainly been a hot topic of late. And with changes in legislation and really, tenants, there's plenty of tenants out there that are responsible pet owners. So it makes sense that they can have a pet as part of their family. But I know for owners, it is a concern. They're worried that perhaps that pet won't behave or treat the property as they would want it treated. But if owners have the right insurance, they don't need to worry about that. They can be protected through their landlord insurance. Importantly, we apply legislation to our policy in assessing a loss for an owner and settling a claim. And that's really important because we understand as legislation changes, how we too have to address how we settle claims and how we look at issues for owners, because we realise that you're restricted in what you can do and how you manage your property. So we make sure that we're supporting the legislation that supports you in renting your property. One of the big things I get asked is, I don't have a lease on my property, will you still insure us? And I think there's a misconception that a periodic lease isn't a valid lease. Well, it very much is. And from our insurance perspective, it doesn't matter whether you're on a fixed or periodic lease term with your tenant, you are fully insured at your property. So this just basically gives you a quick run through of the type of insurance you need depending on the type of home you have. We do offer landlord insurance, but also building insurance. So if you have a freestanding home and you need your own building policy, we can provide both landlord and building cover to you. In the instance of a property within an owner's corporation or body corporation development, you'll already have your building insurance as part of your OC or body corporate fees. So what you need with us is the landlord policy to cover the loss of rent and the contents items there that the OC insurance won't cover you for. So just depending on the type of property you have will depend on the level of cover you need. Just to give you a bit of an example of some of the claimable events that we see and that you can claim through our policy. So the big one being rent loss. This is an important one, obviously, because as I mentioned, rent default went into embargo last year. Fortunately, we're back to a normal playing field now and we can actually offer rent default cover again. But that was really scary for investors that things like that weren't available. So I think when owners pre-COVID sort of and ahed, why do I need landlord insurance? Suddenly when something's not available, you're like, okay, maybe it was really important to have. So we didn't obviously disadvantage any owners that already had insurance with us. They still continued to have rent default benefits as part of their policy, but it was really important for new customers to be able to access that as well. So rent default is just that. Your tenant might no longer be able to afford the rent or doesn't pay the rent, and that's considered rent default, and that's what you claim through your landlord policy. You can also claim rent loss, and that generally relates to if there's an insured event at the property, like if there's a fire at the property and it's rendered unlivable, you then claim rent loss for the period of time it takes to repair the property. Accidental damage is a big one, and it's something that's not often generally included in a lot of standard policies out there. So accidental damage is actually the most common form of damage that you'll see in a rental property. Tenants haven't meant to cause damage, but they just have. Everybody has accidents from time to time, but at least if they do, you're covered for the damage that it might cause in the property. Pet damage, as I mentioned before, it's an important point, but it is something that's not usually included in insurance, but we've had it on our policy for over 5 years now, so we've always addressed the pet damage cover for owners. As I mentioned, the standard events that you expect from insurance, things like fire or water damage, burst pipes, these sorts of things, they happen from time to time, so you need to be protected from that. Importantly, malicious damage is included. Now that's defined as damage caused through criminal intent. So we support owners by covering that type of damage. You just need to be able to report it to police, and it is a criminal offence if your tenant does, conduct criminal activity that causes damage in your property. And then things like theft, either from your tenant or a third party that enters the premises, is also included in the policy. Legal liability is across all our insurance, and it's a really important level of cover because it can cost the most to an owner if you don't have legal liability protection. Most people refer to it as public liability cover, but it's not called that for a private owner's policy. It's referred to as legal liability cover, and it means you're protected inside your property and on your property for somebody suffering injury or death at your premises. Moving on to the actual policies themselves, I'll just run you quickly through the benefits of each of them. The landlord policy's got 3 areas of cover. It covers your loss of rent and default, and it also covers damage to the contents along with your legal liability. So looking here at the list of benefits there, you can see where our policy, the events, the type of events it covers, and what our policy limits are. We either cover up to 52 weeks rent or 10 weeks rent, depending on the event at your property. So there's quite extensive cover there if you do suffer a loss, and importantly, there is no excess to claim, and that's something that really makes insurance of any kind important, is what sort of excesses you're going to be charged if something goes wrong. We see a lot of owners, they may have, say, building insurance with a standard provider, but they have our landlord policy. Now, if they're experiencing damages to the building, sometimes those excesses can be massive, and it actually means that they can't claim for the loss they've suffered. So low or no excesses are really important to look at. Landlord, the contents and liability section of the policy covers your damage items that we spoke about before, the pet damage, the accidental and malicious damage cover, and theft of contents. They're all covered up to $70,000, and that's our standard cover for every policy. So you can insure above that if you need to, but at $70,000, that's more than enough contents cover for most properties. Important to note, if you are renting a property that has some furniture in it that you provide to the tenant, and that's part of their agreement with you, that's also covered if they're your contents that are in the property. The excess on damage claims for the landlord policy is only $250 a claim. So even if you suffer minor damage, it's still worth lodging a claim because you may get some money back for it. And that's what it's about. You may as well, use your premium that you're paying for each year. And that legal liability covers included up to $20 million on every policy. So moving on to the building insurance, we can insure those freestanding properties for you. Our premium is based just on the sum of insurance you need. So that will determine what your premium is going to cost you. Quotes for that can be done on an ad hoc basis. So that's very easy to work out for you. You can see there you're covered up to the sum insured for accidental or malicious damage at your property. And then there's also some additional benefits there. If you, do suffer a total loss at your property, there's some additional value there. Over the sum insured for those extra items. Now, the excess on our building insurance is only $200 for most claims. So once again, regardless of whether the property sustained minor damage, it's still worth putting through a claim for it. And then if you're suffering things like glass breakage or fusion of motors, it's only $100 excess, so definitely worth looking at. Now, your building is defined as your bricks and mortar, basically. It's the structural items at your property. So they're the items that are going to cost you the most if something goes wrong with them. And it's really about protecting your property asset. So that's a snapshot of our policies that we offer and the benefits that they include. Obviously, here at Inner RE, they can help you with information on the policy. You can come to us direct if you want quotes, or they can also assist you here if you need help with cover for your property. Some of the exclusive benefits that we offer, and this is to all customers, we offer all new policies get 2 months free cover, so you'll actually get 14 months cover in the first policy term. The landlord policy on its own is $309. That's our Victorian rate, but we do insure properties nationally. So if you have properties in other states, we can also look after you there. We do offer a multi-property discount for having 2 or more properties insured with us. And it's really about having a policy that has all that inclusions and comprehensive cover that you need as an investor. So I think combined with our premium, the benefits that the policy includes, and the fact that we do support agents and the Residential Tenancies Act means that our policy is really well suited to investors. So I hope that's given you a bit of insight into what we do and what we offer. We're about supporting you and your managing agent. So yeah, if anybody has any questions or wants to learn more, they can shout out.
All right. Thanks so much.
That's all right. Thanks.
That was great.
Yeah, that was. Yeah, no, that was. And it's really insightful. And yeah, just going on the point around questions, well, just a reminder to everybody watching, the Q&A is open. And obviously, I know we've spoken to a few people already that said that they might be asking a few questions this evening. But no, it was really good. There was a lot of information to kind of take in there, but it was, yeah, really useful.
Good, excellent.
Yeah. One question I've got just going through that. So you mentioned the pricing there. Is that affected based on the property or on the rent? I mean, do you guys assess every individual property differently, or is that just a fixed cost and everything you've mentioned tonight is included in that?
Yeah, well, that's a good question because the landlord policy is a fixed policy. So it does suit any property with a weekly rent of $1,000 or less. So any rent loss you're claiming is based obviously on your specific lease agreement. So that standard policy at $309, everything's claimable $1,000 or less a week. We can insure properties that have rental amounts over that per week, and that will just increase the premium. So we can provide a quote if you need cover above that amount. Yep. And with the building policy, it's not based specifically on the area or the type of property that you're insuring. It's based on that sum of insurance. So if you determine that your property is going to need a $400,000 replacement value, that's what we're insuring you for, and that'll determine what the premium is for your property.
Yeah. Perfect.
That's great. I had a couple of things that I noted down as we're kind of going through. So you mentioned that the excess on damage is $250. So yes. Really low. Because I know most excesses. I mean, like car excess, for example, might be $500 up to $2,000, and and like it obviously ranges. So with such a small excess, does that mean that say there's a small spill on a carpet, and we're looking at replacing a carpet, say in a bedroom or something like that, all of a sudden it's something that becomes a claimable event.
That's right.
And is worthwhile claiming.
That's right, absolutely. Because even like small areas, it might cost you $500 to replace that carpet, but if you're going to get $250 back, use your policy. Yeah. It costs you $309 a year. Yeah. So you may as well use it.
Yeah, of course. And then I suppose you get the advantage, because I know there's usually a reluctance to make a claim on insurance because you're concerned that your premium is going to go up next year. But obviously in this case, it's fixed.
That's right. That's right. And I hear those fears all the time from owners. They're like, oh, is it worth me claiming? Absolutely it is. It's not going to affect your premium. Even against the building insurance, your premium's not going to go up just because you make a claim this year.
Yeah.
We charge the same rate of insurance to everybody regardless of their claims history.
Great. Yeah. Okay. No, that's good. That's good. The other, I've noticed there's actually a few questions coming on through in the Q&A, so we'll get to those. But 3 already, but we'll get to those. I had a couple more of my own. Just on the, I suppose the owners corporation insurance versus landlord. Obviously, a lot of the properties that we manage, given the marketplace that we're in, typically have an owners corporation, and I suppose what a lot of owners, I suppose, get a little bit confused with sometimes the fact that there's obviously a building policy within their owners corporation fees that they're paying every year. Is it worthwhile maybe just touching on some of the differences between the two? I know you mentioned obviously there's building cover and then there's landlord cover, but I don't know, I think of an event that happened a couple of years ago now within our own business where there was a burst sprinkler in an apartment that flooded the entire apartment. And thankfully the landlord at the time did have landlord insurance and was covered for, I suppose, the contents within the property because of what happened. In a situation like that, is it maybe worthwhile touching on the differences between the building policy and having a landlord policy?
Yeah, definitely. Look, the being in an owner's corporation or a body corporate development means that, yes, you do have building cover, but there's elements of that policy that won't protect you for your contents or your legal liability inside your apartment. So a lot of people apply their landlord policy just when their property becomes leased. So they might have ownership of a unit within an owner's corporation, but they don't have insurance on it until they get a tenant. It's obviously a choice to do that, but because the policy is also covering the property contents, if that sprinkler went off and you didn't have a policy in place and your carpet got wet, no one's going to cover you for the repair of that because your OC insurance doesn't include your contents. It doesn't include your contents cover. And so you need to have cover for your contents, whether the property's tenanted or not, because we never know what can go wrong, and that's the point of insurance. So that legal liability cover and the contents cover being applied to your property, even when it's vacant, is important.
Yeah. No, that's great. So yeah, and that's where I suppose that mention of 14 months cover is quite useful because I know a lot of owners will say, well, that's fine, don't place the landlord insurance until we found a tenant because I don't need landlord insurance if I don't have a tenant in the property. But obviously that first 14 months cover is good because it covers any vacancy period that you might have at the beginning and then cover you through.
And the other benefit we have on that is if you set up cover today for your property, we actually give you 60-day payment terms. Okay. So it's allowing time, if you're a new investor, you've got time to get a tenant in your property to start generating some rental income, and then it makes it easy to pay for that insurance policy through the rental account if that's what you choose. So we can cover you today, but the policy is due for payment in 60 days.
That's great. Cool. That's really good.
It is alright with saying just because everyone sometimes gets the confusion between what's covered in under building insurance and what's covered in the contents. I was told once that if you basically flip a house upside down and shake it, anything that falls down or falls out is contents. That's right. Everything else is building.
Yes.
Yep. Okay.
And that's a great way of thinking about it, but then I'm like, oh, do those floating floors, will they fall out if you shake the building? So too with carpet, because it is pinned to a property, I guess. Like, it's tacked down, it's under the skirting boards. But carpets and floating floors have always been defined as a contents item. Okay. So that does fall to your landlord insurance. There is a difference now. Sometimes in new buildings, floating floors can be attached to the property structure rather than being floating, but they're still called floating floors. So in the nitty-gritty, it gets determined whether the OC or the landlord insurer is picking it up. But generally, it's floating floors, it's carpets, it's your curtains or blinds, it's unfixed lighting, and any of those household items that you might be supplying for the tenant. A lot of properties now come with for the tenant, they might include a microwave, a washer, a fridge, those types of things. They're all part of the landlord contents because they're not fixed to the property. The other way to look at it is things, because people sometimes get confused about the appliances and where they fit in and what do they fall to. Plumbed in appliances belong to the building insurer. So if you're in an OC, an oven, an air conditioning unit that's fixed to the wall, all those types of things fall to the OC building insurer because it's plumbed into the property. But if it's a loose item or it's just something that's plugged into a wall socket, like a fridge or a microwave, it falls to the landlord contents.
Right, okay.
Yeah.
That's great. Yep.
That's very
Just
good.
one thing that I think would come up a fair bit in
Yes.
with property management, there's always that, who's the fault if a washing machine floods, or
That's right.
the air conditioning unit might fault, whatever it may be. But yeah, it's a very good point.
Yes.
Yeah.
Beautiful. That's good. We've got 6 Q&A questions already, so we might start working through those. I'll read them out as we will rapid fire them. I think we will tonight. So the first one is does PRP offer landlord and building insurance for rural properties? So this is one of our landlords. I come through as anonymous, but I have a fair idea who that might be. I suppose, is there any restriction? Is it just residential? Can it be rural as well?
Yeah, look, as long as it's a residential rental, there is a limit on land size. So I think it's larger than 10 acres. I need to check that, but I need to check on the land size. But it has to be that the policy suits the rental agreement. So if you're renting out the whole farmland and the outhouses and like all the kind of chattels, I guess, with that property, that's a different level of insurance. It's probably not right for a residential landlord and building policy. But if you have a property on acreage, but you're simply renting the house on that acreage to a tenant, this would be the right policy for you, just for the landlord and building component. But we don't extend to, if you've got fencing and farm sheds and things like that, your building insurance isn't going to extend to those type of items. So you probably are better off looking at an agricultural or farm type policy.
Yep. Okay. Oh, that's great. That's very useful. The next one was, can we make an insurance claim if the tenant is issued a termination notice by the property manager, or must we go through VCAT first and receive a court order to be able to submit a claim? That's a very specific one. But I think
property manager's written that one.
It does sound a bit like a property, and it may have been a property manager that's written that one. But I think, basically it's meaning that obviously if the landlord's initiated the termination, perhaps due to, I don't know, it might be due to an issue with the tenant.
Yeah.
Do we need a VCAT order essentially to
Look, you don't specifically need the VCAT order to support the claim. It will depend on the event at the property. Sometimes you need to follow through with that VCAT order because you need possession, or there's, compensation or different things that you need to do that. But effectively, if you've ended the tenancy and if there's rent arrears at a property, but perhaps that tenant has awarded you the bond, so you haven't had a reason to go to VCAT, I guess, what you can then do is use that to support your claim with us. We don't want to unnecessarily tie people up in the court system to lodge a claim, but it's just making sure that we can assess it based on the information we've got, but it's not an absolute requirement to have a VCAT order at all.
Yeah.
If the tenancy's been resolved and the tenant's in breach and the tenant owes you something in accordance with the legislation, that's what you come to us to claim.
Okay.
But retaining a bond it forms the first part of triggering a claim because you are holding the tenant to account for whatever loss or damage they've caused at a property.
Yeah, of course. Okay. Because there's also, I've seen this previously, and I don't know whether this applies to PRP, but where, you potentially claim a portion of the bond for whatever it might be, but there's cleaning required at the property as well as, rent arrears as well as some damage.
Yes.
Sometimes the cleaning's separated out and claimed just from the bond, and then the insurance pays out over and above. Is that the same in this?
That's right. That's how we work too. So once you've retained that bond, you might need it. Like you may have had to seek the bond for other reasons. Like you might have had to go to VCAT and seek the bond all for your rent that's in arrears. But you've got a rent loss policy to cover you for that. Once you've got that bond, you can use it for other things that garbage, clean up, rubbish removal, maintenance at the property. You might, there might be 3 door handles missing when you go in there. You can use the bond for those types of expenses if you need to.
Yeah. And that does happen often where you'll have there've been rent arrears on a property, then you have to go in and there's over and above that, bond and compensation, those sorts of things. So
that's right.
Yeah. Okay.
So we'll work with you through that, with the property manager, just determine what we can, if we can exhaust the bond through those types of expenses, we will, because then you're claiming your rent loss through the policy.
Yeah. Okay. No, that's great. Got 4 more questions. So there's the question here. So does landlord insurance cover repair and maintenance caused by the builder out of warranty or out of liquidation? So I think that one there, is probably something where, so there's a building defect that's kind of carried on beyond.
Outside of the warranty period.
Yeah. And
it's not claimable.
Notified. Okay.
Even through insurance, because what insurance doesn't, like an owner's personal building insurance policy won't cover them for somebody else's faulty workmanship. And unfortunately, if you're outside of warranty, the owner is caught with a loss there.
Yeah.
Because anything that's related to the build, anything that's defective, like if you've had something installed in the property that doesn't work properly, you've got to go back to the manufacturer or go back to the builder where you can. And if it's outside of those warranty terms, there's nothing more you can do. The building insurance doesn't cover it. It's for an event that's caused damage at the property as opposed to something that's existing.
Ongoing issue.
Yeah. Okay. Yeah, and look, and I suppose just on a side point on that, obviously we've got the owners corporation part of the business there as well, and we are involved in some newer developments there too. Push back on the owners corporation manager where you can to get involved, because often they have the details of the builder, and they'll be typically liaising with the builder on building related maintenance. So if there's something that's lot specific to one of the individual apartments or townhouses, whatever it might be in there, then they might have the right contacts to be able to get that happening for you. Obviously, if the builder's in liquidation, it's a bit more difficult, but yeah, certainly speak to the OC manager as well as another option.
There's also actually on that point, there is, if you have had a builder that's gone into liquidation or has disappeared or insolvent or for whatever reason, there's a problem at your property, that builder would still have to have had insurance when they built the property. So you can go through the VMIA, I think it is, and try and access who the insurance policy was with at the time of that build. Try and seek some recourse through that avenue as well, because it's quite often said, oh, look, they've gone, they've disappeared, but they're still responsible for having insurance for your property while it was being constructed.
Yeah, exactly right, exactly. The next question was, there's a lot of anonymous questions. No one's putting their names to any of these tonight. It must be very specific. Do you provide cover for hardship? So, for example, if the court releases a tenant from their lease obligations due to severe financial hardship. So we've had a few instances of that this year, obviously, and I'm sure you've probably experienced it as well, or last year, sorry, where I suppose VCAT members awarded the tenant, to terminate their lease early, or perhaps given them a rent reduction prior to them vacating because of hardship. Yes. Is that covered by policy?
It's covered for what their liability is for the rent. So if they are awarded an early release, that's okay, but they still owe you rent up until the end of that. So we still pay out the arrears and the default up until that tenancy ending.
Yep.
Emergency laws are a bit different. Like the last year's been a bit different because obviously of the emergency legislation that's been in place. If we didn't have a COVID situation at the moment and say a tenant had just simply lost their job in a normal world, lost their job, they went to VCAT to request getting out of their lease because they could no longer afford it. We do have a release from tenancy agreement clause, so your owner could then claim that 10-week release from agreement in association with a loss like that.
Great. Okay. Yeah, that's useful. Yeah, and I suppose it's probably a good point to mention at the moment, obviously, where 29th of March will be the end of the emergency laws, so we then go to normal operating conditions, and obviously on the 29th of March, it's the same date, obviously the new laws kick in, so there will be a future session on that, but yeah, obviously there's some changes to the way we need to go through the process from that point forward. So very good. So 3 more questions. We'll try and get through these relatively quickly, but so will certain types of repairs be covered under insurance? For example, costs to fix a burst water pipe. Again, quite specific, but I suppose maybe one way to look at that question actually, and I know we've kind of had this previously, is the cost to repair versus the cost of resultant damage of say a water leak as an example. Where does the landlord insurance policy stand?
Where does it kick in? Yeah, so the event of the burst pipe, I guess, is deemed maintenance. So the cost to repair that pipe is a cost that is borne by the property owner, but there will be resultant damage from that. If you have a burst pipe and it floods your property and your carpet is soaked throughout, the resultant damage is the soaked carpet. that has to be removed, replaced, whatever has to happen. Sometimes it's just drying units have to come in and restore that carpet, dry it out. Those resultant costs and repairs are claimable through the policy, but the cost of the pipe itself is borne by the owner.
Yeah, yeah.
Does that stretch as much as, say, a tradesperson? We had this at a property recently. A tradesperson, hit a pipe or a sprinkler system, and it flooded an apartment and a few apartments below.
Yep.
Would that stretch to that as well? So the owner would have to pay for the replacement of the repair of the pipe, but the water damage to the property?
I think maybe the trade might have to pay for the repair. I don't know, that might be another issue, but certainly any resultant damage from that, the owner would pick up through the policy. But I guess whose liability is to repair it if it's been caused by a third party? That could be a discussion with the trade.
It does happen from time to time.
Yes, absolutely.
Been a couple of renovations that owners have carried out that have resulted in a few.
Yes.
Okay.
Sorry to be so specific. I've got to say we're drilling down to really specific scenarios here, but it's good. I think it's really useful understanding. Look from our perspective as well, just understanding where the landlord policy has value. And I suppose we've got a couple more questions to go through, but I suppose that's what we want to try and get across tonight as well to landlords to understand why landlord insurance is there. Like, you hope that you never actually have to use it. But in circumstances, and we see them from time to time, but in circumstances where something like a burst pipe happens, or example where I used the sprinkler system went off in an apartment, just walking in there and knowing that there's a landlord insurance policy in place over the property, which is often the first thing that we as property managers will check when we're on our way there. It gives you that confidence that it's all going to be okay, and it also makes it easier then for the landlord to stomach. So they go, well, it's okay. I understand that it's going to be an inconvenience, but financially, I'm protected.
Yes.
And for $309, it seems like a really small.
It isn't a huge price to pay. It's tax deductible. It's part of being, I guess, an investor. It's one of those costs that you have as part of being an investor in property. And look, the rent loss side of it can be. This doesn't happen obviously very often, but we've had instances here where apartment towers have caught on fire. We ourselves have insured properties within those that you couldn't access the property for 12 months because the building was condemned. Those owners that had a landlord policy could claim their rent for 52 weeks while that property was being repaired. If you didn't have the cover, you'd be sitting there with an empty property, no tenant, and no way of tenanting it.
Yeah, exactly. It's you're right. It's just that peace of mind. For me, I know personally, for me, it's that peace of mind. So,
and I don't think you have to look at it as because a lot of landlords and a lot of people look at it and go, it's $309 a year. But if it's that once in an even 10-year event that might happen, it pays for itself.
That's right. Yeah.
Perfect. All right. So just the last two questions. So so this is around pet requests. So as we can't obviously request tenants' requests for pets in rental properties, and we also can't, with the new legislation, can't request a pet bond anymore either. What kind of claim can we submit for any damages caused by pets? So you mentioned before that you've obviously been covering pets for quite a number of years now.
So even this sort of outdates legislation and those changes there, but because we have a background in property management ourselves as a business, we knew that pets was always part of a problem in rentals, even if you haven't approved a pet. So the most common cause of damage we see is soiled carpets, because quite often pets will live inside. The tenant that's in there with the pet doesn't mind living with the smell, but the next one will, guaranteed, and you'll need to have that carpet replaced, because if they are soiled carpets, it's gone through to the underlay. Quite often it's gone through to the subflooring as well. There's, it can leave quite a mess behind, but if you've got the cover, you don't need to worry about that so much. And as I mentioned before, the landlord policy includes the pet damage cover for contents up to $70,000. But if you're in a situation where you can have the landlord and building insurance with us, those pet damages will extend to the building too. So if you have a house, suddenly your building's protected up to $70,000 for those pet damages as well. So the pet might not have only soiled the carpet, they've also destroyed the back door or whatever it might be. You can then claim that through the building policy.
Yeah, that's good. Yeah, and you're right. It's I suppose it replaces the need for a pet bond, because you don't really.
You can't ask for it now anyway, so don't worry about it. Just have the insurance.
Yeah, exactly. No, that's great. And there's another quite specific one too, talking about one of your competitors actually. So I don't know whether you're able to answer this or not. But
let me leave the name out.
Leave the name out.
Yeah. So one of the other well-known, well-advertised ones on TV is probably the best way of putting it. What is the point of difference between yourselves and others that are out there in the marketplace? I know that the fixed price point for me is a big thing, because obviously when we're talking to people about it, it's not going and getting a quote and then coming back and it varying based on property type and all the rest of it. But what else I suppose differentiates PIP to the other products that are out there on the market at the moment?
Look, I guess we're similar in that we're specialised. Like there's other policies on the market that will also support the legislation and offer similar benefits. It's really, I think, working out what fine print's important to you as an owner. We've tried to make our policy very easy to understand. There's a lot of policies out there that have different weeks of cover or values of cover depending on 5 different types of events. We've made ours simple. It's either 10 weeks or 52 weeks rent loss, depending on your event. That's quite easy to figure out straight away. The inclusions of cover, it's up to 70,000 for all your contents items. Some other policies will have sublimits within that. They may have cover for up to, but if it's this, it's only this amount. They're the sort of things you've got to look out for. It's always fine print with insurance. Excesses, once again, make it valuable. So there will be varying excesses amongst the specialised insurers. And I guess just the premium, what you're comfortable paying as an owner to have protection will have different level of benefits, like different sums that we offer. But you have to be comfortable with what you're willing to pay and what benefits you get. So the most important thing, I think, when you're comparing, if you've got a few different specialised insurers that you are comparing against, just have a look at the different benefit limits and the excesses. It'll tell you pretty quickly where the value is.
Yeah. Okay. All right. No, that's great. That's good. Well, that's it. We've covered off on quite a few questions. I've got to say it's probably the most number of questions actually received in any landlord night, which is great. I think it just also demonstrates people's willingness to understand what's going on and how it works, because it's a really important area for a lot of landlords. I think it probably hadn't been front of mind for a lot of people until last year, and certainly has been brought to front of mind for those that have had policies. Even myself, like I received a renewal for my own a couple of weeks ago, and seeing the price double and all of a sudden become a variable amount from the previous insurer, it took me a little bit by surprise. So, going through last year's renewals where a lot of the the rent default had been removed, and now coming into the new year and a lot of them have started to change again. It's nice to see some consistency in the market. So yeah.
And a simple policy too. I think is the most important thing, because it was, as you were saying, we were reading the policy and stuff like that. We had a situation with another insurer that what they had on their pamphlet of what they would cover was very different to what their agreement when they were actually signed the policy with. So little things like that, they'll try and pitch it one way and then do the complete opposite. So I think it's a nice simple policy that is easy to understand and easy to get through. It makes all the difference.
Yeah, exactly.
Yeah.
No, great. Thank you very much for that, Sam. Really
Thanks
appreciate
for having
it.
us.
It's great. And I think we'll just do a quick wrap up on what's been happening, because we haven't really spoken to anyone about the marketplace over the last few months. I think we the last time we gave a bit of an update was probably start of December, I think, which is when we had realestate.com join us. But
and Sam, this is an opportunity for you to start firing some questions at us.
Yeah.
What's going on with the market.
Yeah. Nothing too specific. But I think I might just start off on the rental side. So obviously last year was a very challenging one for rentals. We've seen, particularly in our marketplace, we've seen rents reduced by anywhere between kind of 15 up to about 25%. On a positive note, though, we've seen that certainly stabilise over the last couple of months. So since December, January, rents really have plateaued. We haven't seen any sharp declines since the end of last year. And we're certainly starting to see vacancy rates decrease. So I think as an office at the moment, we're sitting at about 7%, which is great. It's the lowest we've been in 12 months. I think as a market in total, I saw a report this morning that said that the Melbourne CBD market's still hovering around the 13-14% mark. So, pleased to say that we're tracking well ahead of that. And it's just, I suppose, little simple things that we've been doing, and it's obviously communicating to you over the last 12 months really, around just making sure that we're doing all the fundamentals correctly. So just making sure that property's presented as best as it possibly can. So professional photography, premier ads on realestate.com, making sure that your property is available for viewing 6 days a week, not just on a Saturday and open for inspection and hoping that the right tenant comes along. They've all been really effective at getting those vacancy rates down, and even our days on market, which is obviously a pretty important measure, particularly for landlords, because you don't want your property sitting there for too long. Our days on market's down below 2 months. So again, tracking ahead of where the rest of the marketplace is going. We've seen it blow out anywhere between 90 to 120 days in some instances, but it's really starting to pare back, which is really nice. So. Good to see some stability in the market. Unfortunately, not really any positive movement price-wise. It hasn't really kind of rebounded up as we, thought it may have. Obviously, for those of you that aren't here in Melbourne, we've kind of come out of lockdown last year, and we had this little mini circuit breaker last week, and all the rest of it, which was sent a few shockwaves through. But looking out the window now, there's plenty of traffic out there. People are certainly moving around a lot more. There's obviously people back in offices, which is creating some positive sentiment out there, and people are really starting to take leases out, which is good. I think we'll probably start to see prices hopefully increase mid-year if we start seeing a bit more interstate travel, happening a bit more freely, and then hopefully this time next year we actually start to see the international students start to filter back in, which I think will be when prices really recover back to. If not back to where they were, but certainly start recovering where they should be. So it's my quick market wrap on where things have progressed over the last few months. But on the sales side, how are we going there?
There's a bit of buoyancy back. I think that the market and the area of the market that's moving probably the strongest at the moment is the owner-occupier market. So those larger sort of 2-bedroom and 3-bedroom apartments have been moving really well. We've had some great results, but all in all, since sort of December, it's bounced back pretty strongly. So we had a really good December, good January, and this month's been pretty positive as well. Bit more our levels of listings are starting to increase as well, which is always a little bit of an interesting one. So does that mean that there's going to be longer days on market because listings levels rise? So it'll be another interesting sort of year. But at the moment, I can't really complain. Prices have in the CBD have probably come off 10 to 15% from the peak of sort of January last year to now. So there has been a bit of a drop there. So hopefully this year we'll hopefully recover a bit of those losses that we've seen. But time will tell. I mean, where the investment market is so reliant on vacancies and rents and those sorts of things. So a lot of investors are sort of staying on the sideline waiting to see what happens on the rental piece. So we're seeing a really strong owner-occupier market there at the moment. So properties that suit that are might be a bit larger, they've got views or better, so some facilities with inside the building are selling really well. But yeah, again, we'll just sort of wait to see what happens over the next course of the 3 to 4 months. What the prices do in apartments, I'd love a crystal ball. I think we all would, but I think if we can get some of those losses back and see some increases, it doesn't have to be 15%, but if we get 5-10% this year, I'll be stoked.
Yeah.
OC, some little wins on there for in OC lately.
Yeah. So a couple of new buildings under management. So there's a small apartment building in St Kilda that we're now managing, and also our first commercial building that we manage now as well. So over in Notting Hill. So it's been an interesting first 12 months in owners corporation management for us, but really good. We've really enjoyed it. I've certainly really enjoyed it. It's a bit of a different piece for me to look at. But yeah, no, I think that I suppose the approach that we've taken with the owners corporation is similar to what we do in property management, which is just being very open and transparent with owners around how we operate. You know, it's certainly an open book, and I think a lot of owners have really appreciated the fact that we've been as open and honest as possible. And yeah, it's been quite good. So hopefully, yeah, the rest of this year we can see some more, and yeah, it'll be quite good.
Not to say that sales isn't open and transparent. I'm just joking.
Of course, it's not.
No, but I think it's also again a reminder to our landlords, if you are in a building where you're not 100% happy with your owner's corporation manager, and want to bounce some ideas off Michael or get some advice, happy, and I'm sure I don't have the knowledge that you've got on it, but always happy to help with that side of it too. Yeah,
and look, and we are working with a few people at the moment on that, and it might be a simple thing where you call me in to have a discussion with a committee on options that you've got as a committee of management to be able to perhaps go to tender or try for a different building or try for a different manager, because it can be a bit daunting to try and navigate that whole process. It's not a simple process to go through, because obviously you do need agreement from a range of different people, and there's a few different avenues that you can go down. So yeah, more than happy to kind of have a discussion with yourself directly or a committee to go through those options with you.
Yeah, I think owner's corporation is similar to landlord insurance. You don't know you need it or pay attention to it until it becomes a need. I don't stress enough to our landlords and even purchasers that buy properties to move into, get involved in the owner's corporation, get an understanding of what goes on, because at the end of the day, it is a large portion of the funds that go towards owner's corporation. So be involved, attend the AGM, see what's going on. Very similar to landlord insurance. It's $309. It can be quite a bit of money, but it's you need it. It's something that definitely needs to be there. So yeah, sometimes you might find out that things aren't going as smoothly as you think, and we've found that with some buildings that we've sort of taken over and been involved in and had to turn around, and that's all credit to you, all your hard work that's gone into it.
Thank you for that. Thank you. But on that note, I think we might finish up. Like I said, we're expecting that if not next month, the month after, we'll be talking about the changes in legislation. I know I'm probably coming a little bit late to the piece, but I suppose the legislation was only formally introduced end of last year, and we're still trying to pare through some of the detail in there. But we'll certainly come to you over the next couple of months with some detail around those, and it might even be over a couple of sessions. And we'll talk a little bit more about that. But again, thank you so much, Sam, for joining us today. It was really helpful. I know for us personally, and I think certainly for our landlords, and given by the number of questions, obviously, everyone got a lot out of it.
And so I think that's great. Keep asking the questions, because insurance is an important part of having your property. So
yeah, great,
absolutely
perfect. Thank you very much, everybody.
Thanks.
Thank you.
See ya.